I'm Alex Norström. It's so good to be here today. I'm Spotify's Chief Freemium Business Officer. I'm responsible for the subscriber business, global markets, marketing, and payments. I'm here to expand on our plans to build a much bigger business than the one you might have imagined, beyond just music subscription business. Right now, we're on track to more than double our reach to over 1 billion users. And with our vertical platform strategy, over time, our ambition is to build the business toward an annual ARPU of 100 euros. This means, on average, looking at both free and paid, we can significantly increase the total revenue across our entire user base. Our music business is the foundation to this story. It is how we've built our relationship with users, and it is what has allowed us to expand geographically all around the world. Today, we'll share how we plan to expand user and revenue generation from this strong music streaming base into new verticals, podcasts and beyond. This expansion into new content verticals will build bigger and more engaged audiences for creators, and it will create new content experiences for users. And as you will see, it will enable revenue growth opportunities. But before we dive into the growth of our business, let's take a step back. What's our operating playbook? Or maybe even more simply put, how do we drive this Spotify machine that Daniel and the team have been talking about today? It starts with the value proposition. With our freemium model, we have created a value proposition for different stages of the user lifecycle, introducing users with free and then layering the different subscriber offerings on top of it. Secondly, we work on maximizing user intake. Once you're on board, our personalization kicks in. Importantly, we make sure you can use our service on the devices you use throughout the day. This deepens engagement and retention. And as we scale reach and engagement, we unlock growth for our advertising business. This drives ARPU. As engagement grows, we're able to improve subscription growth. Whether a free user moves to premium or a premium user upgrades to a multi-account plan. This is what expands our monetization and subscriber base. And yet again, it further improves engagement as users move up the ladder. This is a fantastic flywheel. And the fifth step is that we open up for a la carte purchases, which means that you can subscribe to specific creators or buy things one-off. This uncaps ARPU. We then go back to step one and bundle in a new vertical, rinse and repeat. We did this 3 years ago with podcasts, and when introducing a new vertical, we adjust the offering where necessary to maximize our user growth and revenue opportunities. In most instances, we add to our existing propositions, which is super powerful. Anyone can cross-promote, but as Gustav mentioned earlier, our big difference here is that we do it on top of a super scaled base of users and their existing engagement. So that's the playbook, but how does this pay off in terms of revenue? Well, you just heard Tony talk about lifetime value, how personalization increases engagement, and how verticals drive gross margins. I will focus on users, ARPU, verticals, and geographies today. So let's talk about geographies for a minute. Our geographical markets are different stages of growth. So for a super scaled platform, there is no such thing as a one-size-fits-all. We have tailored growth plans for truly global business in 183 markets. Another cool thing is that by addressing the opportunity in this way, there's a powerful compounding effect as we improve each component in the equation. So if we make changes in the product experience of a vertical globally, it means it is beneficial for geographies all around the world. And if we improve monetization locally, it has benefits to all verticals locally. And with regards to monetization and ARPU, there are two important factors to consider. One, the pretty unique and advantageous fact that we have always invested in multiple ways to monetize, whether it be subscriptions, non-recurring transactions, or ad sales. This stacks our ARPU. And two, as we add more verticals, this stacks our ARPU even further. And on this chart, we have hypothesized the potential monetization mixes for verticals, just to give you a sense of what this might look like. So let's spend a little bit more time on each area to really give you a sense of where we're going. So since our last Investor Day in 2018, we have continued to expand Spotify geographically. We are now available in 183 markets around the world. And with 422 million users, Spotify is by far the largest audio subscription streaming service in the world. And there's still more room to grow. Although music is universal, the geographies we operate in are distinct. So they represent an incredibly diverse range of cultures and consumer habits. It's a complex job driving a truly global machine. But in this complexity, there's beauty. For any given country or region, the music streaming paradigm and the industry starts at different points in time, and each may move at a different pace. In the US, West Europe, and in Australia and New Zealand, music is the standard way to listen to, streaming is the standard way to listen to music. And in these markets, we are the clear leader. In Latin America, we're well on our way. In the Middle East, Africa, and Asia, some of the world's largest total addressable markets for music, we are just getting started. And as you heard from Madeline and Selena, artists from these markets are connecting with our listeners globally. So for the purposes of this presentation, we will split the world into two groups, established and emerging markets. First, let's take a look at our music business in the established markets. Our user growth in the more established markets has been spectacular and put us in a clear leadership position. We now reach nearly a third of all addressable consumers in the US, Western Europe, Australia, and New Zealand. As we grow our users, advertising sales grows. Dawn will be talking more about the fantastic opportunities in this space shortly. And in the US, the growth has been fantastic in the last few years. Advertising is now almost a quarter of our revenue, compared to 1/10 globally. We can see where this is heading. Our subscriber growth has also been phenomenal. We have leading market share in paid users, and we are double the size of the nearest competitor in almost all of these markets. We've also proven over time that we can manage down the churn of these subscribers, and this happens as the base scales, but also because we apply two downward-facing pressures. Engagement increases over time, and B, we improve the available subscription options. And as you saw from Tony, reducing churn is critical in growing lifetime value. As free users convert, subscribers upgrade, and the ad business scales, the ARPU increases. So we see plenty of potential to further increase ARPU in these established markets. To reach a mega-scaled audience, we cannot ignore the emerging markets. These have the most populous TAMs in the world. The TAMs are naturally going to grow as more of the world continue to adopt smartphones. And as you can see here, we've got traction, but we've only scratched the surface. MAU over TAM is about 8%. So clearly, we're in the early stages of applying our playbook. So for the purposes of today, we are calling LATAM, the Middle East, Africa, and Asia our emerging market set. First, let's take a deeper look at Latin America. We are close to having 100 million users in the region. MAU over TAM is 20%, and the engagement is fantastic. We've also seen that our subscriber proposition has started to gain serious traction. And with a 60% subscriber market share, we have a strong lead. The ads market is also showing signs of improvement. There is no ambiguity here. LATAM is clearly moving in the direction of the established markets. Our operating model is working. India is earlier in its journey, but showing strong signs. And in the last 2 years, we have raced past all competition. And we are now the clear #1 music streaming service in India, judging by engagement. And as engagement grows, our playbook momentum continues to increase. And with the explosive growth in brand awareness, well, we are also on our way to being the market leader in podcasts. Okay, zooming out again. We can see that the way we're driving our machine is working. We've come a long way in the established markets. Engagement is phenomenal, and we have more than a third of music industry market share. And this is because of the phenomenal strength of our subscriptions business and our fast-growing ads business. Looking ahead, the emerging markets are on a path to follow the established market. User growth is already strong, with a TAM that is almost 5 times as big as the established markets. We will continue to innovate across our propositions, tailoring our playbook to the needs of the regions to maximize our user and revenue growth opportunities. So to sum it up, we are on a path to hitting over 1 billion users globally by 2030. Our playbook is working around the world. I'd like to welcome my colleague and dear friend, Don Ostroff, back to the stage to spend a few minutes demonstrating how our growing ads business will add to our total ARPU. Don?
Thank you, Alex. Okay, I am excited to be back to talk to you about Spotify's advertising business, the progress that we've seen thus far, and the massive opportunity ahead. Spotify has proven time after time that when we put our energy and focus into innovating an industry, we succeed. You've heard about music and podcasting and how Spotify can leverage data from one vertical to improve the results in another. This rests in our powerful direct relationship with our 422 million users. Now, let's talk about a key engine behind our advertising business growth. As we've always said, the opportunity is bigger than many realize, and that's because audio advertising has historically been undervalued, especially compared to the exploding consumer engagement in this medium. Digital audio consumption has been on the rise for years, and ad spend is finally starting to follow this growth. Since we last spoke to you in 2018, we've tripled our ad revenue across music and podcasting, and we've established an entirely new business with podcasting, growing it by 10 times since 2019. We started to globally scale our self-serve ads manager, Spotify Ad Studio. And all of this has helped to make Spotify part of the elite class of $1 billion plus platforms. We've achieved this growth by leveraging our rich expertise in streaming to rapidly modernize audio advertising. And we're continuing this revolution by focusing on 3 key product areas: streaming ad insertion, Spotify Audience Network, and reinventing the audio ad experience. Let's begin with streaming ad insertion, or SAI. This delivers the intimacy and quality of traditional podcast ads, but solves the limitations of RSS and downloads that Maya mentioned earlier. I'll explain. SAI is able to record an ad impression in real time, as soon as the ad starts playing. So for the first time, podcast advertisers can receive insight into confirmed ad impressions. And now they know their ads were actually heard instead of just crossing their fingers based on downloads. SAI unlocks valuable first-party audience data and insights, delivering the most rigorous targeting and reporting available in podcasting today. Next, we established the foundation of the Spotify Audience Network, also known as SPAN. SPAN is our audience-first advertising marketplace that makes it possible for advertisers to connect with listeners across a broad range of podcasts. Through this network, we use our powerful first-party data and variety of targeting solutions to enable advertisers to reach audiences at scale. This means that they're able to reach a target audience across thousands of shows rather than targeting an individual show. Here, we're leading the charge to revolutionize podcast ad buying. SPAN was born out of our acquisition of Megaphone, and strengthened by our more recent acquisitions of Podsights, Chartable, and Whooshka. That flywheel of having more creators adding more content to our network means more listeners who will in turn attract even more advertisers. This is what makes SPAN so powerful, allowing us to grow our podcast advertising revenue by many multiples. It's been in the market for just over a year, and it's already delivered major results for Spotify and for publishers. And we recently invited eligible anchor creators in the US to join SPAN. And in the future, we'll be adding music inventory as well. Third, we've started to innovate on the ad experience itself to make it more interactive for users and thus more impactful for advertisers. One recent example is call to action cards. Powered by SAI, this format makes it easier for users to engage with promo codes as they listen and offers advertisers an even more direct way to measure campaign success via clicks. We see this format as the foundation of future ad experiences in podcasting, music, and beyond. Imagine shoppable ads, polls, and brand Q&As. As Daniel has previously said, gone are the days of ads accounting for less than 10% of Spotify's total revenue. Advertising is now poised to become a key growth driver. Over the long term, we expect ad revenue to be significantly more than 10 billion euros annually. And as Alex just explained, we're seeing very strong user growth across the world, and Spotify's ad machine stands ready to unlock huge value for creators, publishers, and advertisers. In some of our largest markets, including the UK, Germany, and Japan, we've just scratched the surface, and we see a significant opportunity to implement and improve monetization in emerging markets across Latin America, Africa, and Southeast Asia. In order to capitalize on this, we've been scaling our international sales and support teams and launching products like Ad Studio, SAI, and SPAN in these markets. We've also deepened Megaphone's footprint in Europe, Australia, and Canada, signing up some of the largest publishers in these regions and bringing them into SPAN, expanding our proven flywheel internationally. As we fully realize our international investments over the next couple of years, we expect to see higher margins and faster revenue growth. Next, we're up-leveling our measurement offerings. This will help advertisers understand the value of their spend and in turn increase demand. We're doing this most notably through our acquisition of the leading podcast measurement service, Podsights. Now, Podsights offers an advertising attribution solution that is built specifically for podcasting. The product allows advertisers to attribute podcast ad exposures to actions taken on advertisers' websites or app, helping them to better understand their ROI. Long term, we intend to extend Podsights' capabilities beyond podcasts to music. We're also preparing to launch a dynamically priced auction for a segment of audio ads. Here, we're enhancing our self-serve manager Ad Studio. We'll introduce features that advertisers have grown accustomed to on other platforms, but with a Spotify spin. Today, we have tens of thousands of advertisers on Spotify, with the majority of our ad revenue coming from the larger brand enterprise category. By making it possible for advertisers to buy based on desired outcomes across music and podcasts, we'll begin to increase our stable of SMB advertisers, and in turn, this will unlock bigger, lower funnel media budgets, like direct response, a part of advertising currently missing from audio. If you look at this comparison, Spotify's ad ARPU relative to some of the digital ad industry, you see why we're so excited about the potential of this upside. We're also starting to explore how we can increase our supply of inventory to meet the incredible demand that we're seeing. We're looking at bringing ad monetization into audiobooks, video podcasts, and unlocking more ad-supported music listening as we continue to innovate across our free tier. We'll have more to share on that in the future. To summarize, with our deeply engaged audience, our logged-in global audience, medium-defining content, and innovative technology, Spotify is the perfect platform to match the right advertiser to the right listener at the right time directly in the Spotify app. We're on track to do this for millions of advertisers across the globe. And because we have direct relationships with our users, we're less encumbered by the tracking headwinds affecting the digital ad industry. These efforts will play a critical role in driving Spotify's powerful mixed revenue model. And as you can see, we believe we have an opportunity to grow our ads ARPU by several multiples. And now I'm going to pass it back to Alex, who will tell you more about Spotify's growing array of verticals. Alex?
Thank you, Dawn. It's so exciting to hear our plans for the advertising business. And this will naturally continue to raise the ARPU stacks around the world. The power is in having multiple business models in our machine. And when you look ahead, the outlook is positive with our subscription, advertising, and a la carte business models playing in concert to generate more revenue for the company. We believe the music streaming market alone has room to grow from $30 to nearly $80 billion by 2030. And analysts, they agree with us. So as the market grows, we will grow. The most natural companion business to music streaming is live experiences. Post-pandemic, fans are clamoring to see their favorite artists live, and venues are steadily coming back. The live market is expected to be worth $40 billion by 2030. We see this as a natural extension of Spotify's existing music business. Because of our scale, the data advantage we can offer to partners, artists, and venues is powerful. This is a potential area to grow total ARPU significantly. But we don't stop there. As you may recall from earlier, the last step of our playbook is to bundle new verticals into our value proposition. We clearly see the chance to add more reasons for people to stick around and spend more time with Spotify. Our current business provides a strong foundation to enter new categories. And we're well on our way to making those categories new verticals. Just like the challenge of putting out a hit second album, people doubted if we could add podcasts alongside music. But now we know the answer. About a third of our listeners listen to podcasts, and we are the global market leader. Looking at where this is going, we will soon have hundreds of millions of podcast listeners on Spotify. This speaks to the power of our scale and the unified experience. We see podcasts becoming a $20 billion global opportunity by 2030. So if you take the growth of music streaming over the next 10 years and extend it with live experiences, and then you add the rapidly growing podcast market on top, we believe we will expand our total market by more than 4 times where we are today, going from $33 to $140 billion. What I'm saying here is that this bundled offering, monetized by our 3 modalities of revenue, will double our total ARPU over time. So not only will the market expand, but the revenue potential of each user, each Spotify user, will expand as well. And that's the size of the opportunity before we even enter into any new verticals. So let's look beyond this. In the next 10 years, there are additional markets and verticals that we believe are natural fits for our platform and audience. There's audiobooks, there's news, sports, and education. Those are vast markets that we can imagine Spotify playing in. There are a couple of common threads to these examples. They are big consumer markets sometimes much bigger than music, and there's a secular trend in these markets being massively evolved by the internet and software. We have an opportunity to consolidate users' habits and purchases to Spotify, and also expand the pie, allowing broader and more convenient access to these new content categories. So take audiobooks. Today, it's a niche market. With our enormous user base, imagine the potential. With our monetization modalities, our LTV optimization, we can ensure that users get access to the right content at the right price at the right moment. We believe there's a golden opportunity for an audio-first platform like Spotify to add value in these categories. As we consider the combined market size of these additional verticals, we think of our future opportunity as 10x. So now that you understand the opportunities ahead, let's zoom in on consumer spend, or the general ARPU levels for some of the categories I just mentioned. We can see that they are an order of magnitude higher than music. They are in the hundreds of euros per year. And these are markets that are big and have high ARPUs. So to us, this is incredibly exciting. Within the next 10 years, our goal is to enter and lead 2 additional verticals. With this, we will be building towards the 100 euros and the 4x ARPU that we talked about. I've saved some of the best for the end. It is our super strength, our subscriptions business. We have more than 182 million subscribers. The scale is astounding. We have a recurring relationship with 2% of the world's population. Our premium subscribers are the most engaged, the highest retaining, and the most passionate ambassadors of Spotify. This is rare, and it gives us the confidence in our resilience as a business. So as we continue to evolve our subscriptions portfolio, we expect to see strong growth in our subscriptions business around the world. This is a function of a strong performance in our existing streaming music offering and the emergence of new types of subscriptions offerings. The key to any successful cross-selling strategy starts with a strong relationship with your customers. It is this unrivaled subscriber base we've built that will help unlock the next set of categories. But let me sum up our plan for user and revenue growth. Leading a category like music and winning engagement makes us top of mind with users around the world. And as a reminder, we believe we will be over 1 billion users by 2030, more than double where we are now. Our current markets of music and podcasts, coupled with our multiple modalities of monetization and our extension into live, will build revenue growth that will take us to a global ARPU of 2x. But we're not stopping there. There are new categories with huge potential still out there. Each of these categories already commands annualized ARPUs in the hundreds of euros. And the combined size of these new categories is in the hundreds of billions of euros. And as we expand into these new verticals, we'll deploy our Spotify machine and we'll apply the same growth playbook. We believe this can unlock our full ARPU potential, creating the opportunity to reach 100 euros. This would be 4x where we are today. This is our ambition, and we'll be updating you soon on new initiatives as they are ready for launch. So to bring it all together, we believe we have an opportunity to double our ARPU with our current trajectory and quadruple our ARPU, inclusive of all of our new initiatives. This is our future.